BI Senior Consumer Products Analyst Deborah Aitken joins us to talk today about luxury goods. Deborah, welcome. LVMH is now the fourth largest stock in the Stock 600 index, and it just highlights that bifurcation between high-end luxury and entry level. What do you think's driven the difference, and do you think there's an opportunity perhaps with the latter over the course of this year?
Okay, thanks. At the ultra premium and premium end of luxury goods, it's about aesthetics, heritage, craftsmanship, leather goods to watches to style, cut and flow of a piece of cloth and longevity. So there is brands at the top end really holding out well. Luxury purchase as an investment, as a long-term holding, and in some cases as inheritance. And at the entry level, as you say, there's been a disparity. But overall, generally, there's long-term positivity there. It's about lifting one's position ahead of mass brands, being seen with that brand, an entry point into higher quality in something that's perhaps semi-mass product rather than or semi-mass produced and finished by hand, and purchasing reliability and items being less commonplace and less visible. So, there's something for both ends, but what's driven the difference really? So high-end spenders with healthy budgets, low elasticity to pricing, fashion-forward customers, and the superior reach of luxury goods, we really mustn't forget here, across all price points to a widening audience via e-commerce and social media. That's played a huge differential into the luxury market, whereas it was already much more available en masse. We saw, just to say, the highest mid-tier brands fully recouping sales and profit by the end of 22. And we're expecting luxury goods growth of 7 to 9% again in 23, led by the biggest brands, Vuitton, Hermes, Chanel, Cartier, among others.
And China is such a big part of the luxury goods story, and shoppers accounted for something like 35% of sales pre-pandemic. Has anything surprised you about China's reopening so far? Are you worried that maybe H2 is just a bit more the same?
Well, that's right. We believe the consumer made up just about a third of luxury goods purchases globally in 2019. And as a reminder there, 3/4 of that was away from the mainland. Nothing is really a big surprise. Maybe companies guided as we entered through January the 8th when the opening happened to gradual reopening through Feb. And we're seeing stores more filled, average basket sizes are higher. We're seeing double-digit growth on the mainland, double-digit growth in Macau, in Hong Kong. And BI surveys and comments really from the half two say we expect more spending, more travel, including international. So some out there were maybe commenting that it was a little bit slow, but there was some hesitation. But there's huge pent-up demand, and that is starting to come through, particularly through Q2, and we expect that to get stronger.
Great. Then maybe finally, you note in your last report on valuation, specifically sector EV/EBITDA multiples, and the early signs of expansion there. Are there underlying conditions within the space to perhaps be a little bit more optimistic about valuation upside?
So on an EV/EBITDA and on a PE, we did see a return on PE to 30 times. We have EV/EBITDA of 15 times. Is there upside? So we expect over the midterm, so 2025-26, for this sector to be 40 to 50% larger by revenue. And in terms of margin, this whole sector, the global luxury sector, is really pushing itself so that it is much more profitable than it ever was before. Heavier cost savings. We think about where they are and that we think that China can garner pace. We combine this with limited supply chain exposure, the proven ability of these highest luxury brands to raise prices, which they'll do again this year, maybe 3 to 5%. Plenty of mid-term and long-term sector drivers, e-commerce, brand extensions, bolt-on M&A. We note that the US and Europe nevertheless face sizable Euro growth comps and there's a consumer spending squeeze. Though for the mid and the long term, we see that EV/EBITDA and PE pushing back towards the high.
Deborah, thanks very much for taking the time to join us. It's a really fascinating sector and look forward to seeing how it plays out. Thank you.
Thanks.